stocks falling the most since the November election as the Trump rally turns into a Trump sell-off. The president's order on immigration raising concerns that his pro-growth agenda could be overshadowed by his protectionist policies. I'm Scarlet Fu.
And I'm Joe Weisenthal. If you're tuning in live on Twitter, we want to welcome you to our closing bell coverage every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. U.S. stocks closing lower, but as Joe was saying, it feels kind of like an up day, mainly because if you look at the motion, or I should say the intraday chart of the major indexes, we did close off our lows, and we did see a bit of a recovery in the last, 20 minutes or so that brought us back. So the S&P only falling 0.6%, the Dow off by 127 points. It was down as much as 220 points earlier.
And at one point, it looked like the S&P was going to break its streak of no days without a down move by 1%, but as you can see, we survived that.
We survived that, and in fact, 2 of the 11 industry groups finished higher, just barely, but they did finish with gains. Consumer staples and utilities, so some of the safe havens, finished little change, while energy shares were the big decliners. Here's some big decliners on an individual name basis. Fitbit will cut 6% of staff, that's 110 jobs, because its fourth quarter results are going to miss estimates on falling demand for its devices. Tempur Sealy International, the mattress maker, lost a key contract. It'll no longer sell to Mattress Firm in the first quarter of 2017. This one contract made up 20% of its revenue, so that's pretty significant. And Rite Aid and Walgreens we're keeping an eye on because it's under pressure from antitrust regulators, and the two cut their deal price. Walgreens will now pay anywhere from $6.50 to $7 a share. That's down from $9 a share. And the exact price will be determined based on how many stores they need to divest to satisfy these competition concerns. In airlines, this was interesting. The Amex airline index tumbling quite a bit at a 2-month low. And in fact, we saw Delta Airlines canceling 110 flights today after computer breakdown on Sunday. And of course, Donald Trump.
And then Trump hammered them, claiming they were part of why there was so much chaos at airports this weekend, which people didn't really buy.
And there you see the decline there. Delta Airlines off by 4%, and there's the NYSE ARCA Airline Index off by 1.8%. And a quick mention here of Mylan as well, because it is responding to an FTC request for information. It's a preliminary probe right now, but the U.S. Investigators are looking into antitrust issues on the pricing of its EpiPen. So we'll continue to keep an eye on that. It certainly came off of its lows.
Let's look at government bonds because there was a lot of action there, not so much in developed markets. In fact, you can see U.S. action essentially flat. German 10-year yields down just a hair. But I want to go to the next board because there's a lot of action in peripheral Europe where political concerns are once again putting stresses on sovereigns, worried about fears again about Greece and whether they're going to get bailout money. 10-year yields there in Greece really shooting higher. Italian yields ticking significantly higher as people still get concerned about the domestic political situation there. And France, you talked about it in that last segment, Scarlet, lots of concerns. There are political worries about Fillon, the head of the conservative Republican Party there. So keep an eye on Europe once again. We see these stresses back on the rise. Not the thing we need right now.
Not the thing we need. And with those stresses on the rise, you see risk on the back foot. And which currency benefits from that? The Japanese yen. It's gaining versus all the major currencies. I'm looking here at dollar yen, euro yen, and pound yen. Of course, central banks meet this week as well. The ECB tomorrow, the Fed on Wednesday, and the Bank of England on Thursday. The South African rand also weakened on speculation that President Jacob Zuma is planning a cabinet reshuffle to consolidate his power, to tighten his grip on power, and that could include sacking the finance minister, Pravin Gordhan, who investors know, and investors can at least know what's coming from him.
It seems to be a recurring theme, I've noticed.
Yes.
All right, finally, on commodities, not a whole lot of action, but gold did rally on some of the, overall market anxiety, but just up 0.5%. And crude dipping a little bit, down 1%, though still above $52 a barrel on West Texas Intermediate. Overall, not a lot of action in the commodities front.
Those are today's market minutes. All right, let's take a deep dive now into the Bloomberg. You can find the charts using the function at the bottom of the screen. And this is something we mentioned earlier about how it feels like an up day There we go. Only because we came off of our lows. So this tracks the percentage move of the S&P 500 on a daily basis. And guess what? We continue the streak of not being able to rise or fall by more than 1% at the close. So we've been stuck in this muted trading range. The S&P has not fallen by 1% since October 11th, 1% or more. It hasn't gained more than 1% since December 7th. We're just kind of drifting.
We're drifting, yeah. We keep waiting for the big volatility breakout. We're going to talk more about volatility in a second. It looked today, at one point we were down by 1%, but we really are on a remarkable streak of almost no sell-off. So, all right, there's been this meme that's going around this year. It's like, this is going to be a great year for active managers. Stock dispersion is on the rise. People are going to go back to funds. But investors seem really skeptical. This is a chart comparing the S&P 500 asset manager sub-index, so the companies that run all these funds. That's the white line. The blue line is the S&P 500 itself. You can see in the last couple of weeks, there's been a massive underperformance of the asset management companies. Investors are not convinced that there's going to be some big rebound in active management this year. And you can see these stocks continue to bleed. The move to passive, the move to ETFs does not seem to be slowing down anytime soon.
Well, the cost is just too much to look past the cost, right?
All right, joining us now to break down the markets, everything that's going on, Cameron Kreis is a strategist at Bloomberg. Cameron, thank you very much. First, I just want to get your take on today because there's all this. People are trying to say, does this have something to do with the domestic political situation we've seen over the last 72 hours? Trump signed the executive order, I think, while we were on air on Friday. So it's literally 3 days. Do you see any connection?
Well, so we've had U.S. stocks go down, U.S. bonds go down barely, and the dollar go down. So naturally, you gravitate towards a sort of a sell America theme. But I think we have to distinguish in terms of the executive order between process and outcome. Because we tend to focus on the outcome, which, is repugnant to many people. But to be honest with you, the morality has generally not been a tremendous driver of investment returns.
Right.
I looked today at the MSCI World Socially Responsible Index, and that's underperformed the broad index by 65 basis points per year over the last 5 years. So as much as we like to invest in terms of doing good or not doing bad, it generally doesn't work. Yeah, it doesn't work. But there's also a process involved here. And the process is a little more troubling insofar as we've had an order that sort of came out of the blue without any vetting by the agencies charged with executing it. Now, if you think, what might that mean in terms of trade or taxation policy, it's a little more troubling because those sorts of issues are more directly related to corporate profitability. So I think you do have to be a little circumspect in how you interpret this. No, you don't want to say today's price action represents the end of the world because, as you've pointed out, we actually rallied a bit into the close and we still haven't gone down 1%. But on the other hand, it sets a worrying precedent for how the administration might act in more economically directly related issues. And then I would also say that, if you believe in technical analysis, the S&P put in a technical formation called an island reversal where we gapped higher on Dow 20,000 day. We went sideways for a few days, and now we've gapped lower. So we closed that gap, which if you're a technician would suggest that we would extend today's move and perhaps break back down through the bottom of the old range.
Do you think to some extent that we're stuck in this range because we still have so many catalysts to come this week? I mean, the executive order was Friday's big headline. We had the weekend to digest it, and we're still trying to figure out what it really means as companies trying to sift through it as well. But we've got 3 major central bank meetings. We've got a jobs report on Friday. There's a lot to deal with. Yeah,
I mean, there's a lot economically and there's a lot politically. And I think people are tending to play their cards a little close to the chest because, to quote the old Rumsfeld thing, there's a lot of known unknowns, and as we found out on Friday, there's a lot of unknown unknowns as well. And in that sort of environment, you tend not to get too far over your skis.
I want to ask you about volatility. We've had incredibly low VIX for a while. The short volatility trades have done incredibly well. You put out a note today on the Bloomberg about what you call the free money trade getting crowded. What are we looking at here, and what do you see as the ramifications from it?
Okay, so this is the short interest in the VXX exchange-traded note, which purports to mirror the total return of the VIX index, which is obviously the S&P 500 volatility index. And obviously what we see here is that the short interest has gone up tremendously over the last several years. Now, you have to be a little careful interpreting the chart because the performance of the ETN has been so bad over the years that they perpetually reverse split it. Right. So the open interest goes up. But the last one was 3 years ago. So this recent rise reflects a legitimate increase in short interest.
There's a huge pile-in of people shorting, trying to short volatility right now.
Yeah. You also see it in the VIX futures, which you could say is, maybe more the playground of the professionals. But what I would say about certainly the VIX futures, where we can get this information, is net shorts are a record in absolute terms, but as a percentage of the open interest, it's actually nowhere near a record. In fact, if you look at the longs in VIX futures, they're higher than at any point prior to last year. So what that suggests is that there's plenty of people who take what one might call the common sense approach of this vol's too low, it can't last, and are trying to buy, and obviously thus far have been relatively unsuccessful in doing so.
All right, Bloomberg's Cameron Christ, fascinating stuff. If you're on the Bloomberg, you should check out his note about the VIX. Great stuff. Thanks for having you on.
Always a pleasure.
Coming up, hear why Mark Halley of PGM Real Estate says Europe and Asia offer greater opportunities insofar as there's more transparency and you can make an accurate projection. This is Bloomberg.
I'm Mark Crumpton. It's time now for First Word News. Former President Barack Obama says he's, quote, heartened by the level of engagement over the travel ban in communities across the nation. That's according to a statement put out by Mr. Obama's spokesman, which also noted he disagrees with religious discrimination of any kind. Mr. Obama says citizens gathered to have their voices heard by elected officials is exactly what the nation expects to see when American values are at stake. Syria is warning that the safe zones for civilians that President Trump has proposed creating could actually be unsafe. The country also says the idea would violate its national sovereignty. The idea of safe zones was ruled out by the Obama administration over fears it would put U.S. aircraft in harm's way. Syrian officials are calling on all refugees who fled the war in their homeland to return home, pledging that the government will meet all their needs. Terror suspect Mohamed Abrini, who's charged today with the November 2015 assaults in the French capital. He was charged in Paris after being handed over to French judicial officials by Belgian authorities. That's according to Agence France-Presse, citing lawyers. Authorities say Abrini and another suspect, Salah Abdel-Slam, were part of a cell that carried out the attacks in Paris that killed 130 people. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Scarlet.
Thanks so much, Mark. What'd you miss? Political uncertainty in the U.S. and Europe may drive investors to buy property outside those regions. Now, that's on top of the ongoing search for yield that's driving more interest in alternative investments, such as real estate. So joining us now for a look at the global real estate market is Mark Halley. He's PGIM's head of real estate securities. Real estate, Mark, thank you for joining us, is often seen as a haven asset, and it's become a bigger part of institutional investors' portfolios as they expand allocation to alt assets. Does Donald Trump's policies and the way he announces his policy change that dynamic?
I don't think it does change the dynamic. People have been investing in real estate for many, many years as part of their diversification, part of portfolios. Real estate's really a hybrid between a stock and a bond. So it's got the income-like characteristics of a bond, but it's got the growth characteristics of an equity type stock. So you can be in an alternative asset class which provides diversification. It provides an uncorrelated return to a lot of other investment alternatives.
What about, now, there was this great story in the New Yorker the other day about all these rich tech and hedge fund people worried about the end of the world, buying property in New Zealand and other places that were safe havens from all the political turmoil. Trump aside, do you see that activity picking up, that people buying property to diversify themselves, not just from a portfolio perspective, but from a political perspective, given all this uncertainty?
Yeah, I can't comment on what individuals have done. People have built bomb bunkers over the years.
Do you see any flows like that picking up?
Yeah, we see that institutional investors have been allocating more to real estate. So on average, the surveys that have come out, institutions about 10% allocated to real estate. And what we see is they're moving up that to about 11.5%. Sounds like small number, but that in the scope of the pie, that's a lot of money coming into real estate. And people have been seeing institutional real estate in their portfolios for 30, 40 years, and what it does to stabilize the returns of their portfolios. So both direct real estate and REITs really helps out the returns of these major portfolios.
Well, in the same way, we've seen wealthy Chinese and Russians park a lot of their money in overseas property markets, London, New York, that kind of thing. Are they pulling back now because of political concerns in the UK, in the US? Do you see any sign of that?
No, we've not seen any sign of the pullback, but what we've seen is people coming here to the US for yield, and to Europe for some extent. So what they're doing is they're looking at their government bonds, they're looking at the low rates. So you see Japanese investors who've been out of the market for a while coming here for yield. We've seen some of the Australian investors and some of the European investors coming here for higher yields than get from the spreads over government bonds, which they get in their local markets.
So looking around the world, obviously real estate has staged an incredible comeback in recent years. What areas are the most exciting to you?
Sure. Well, in the short term, we like what's going on in the United States. There's a lot of visibility in earnings. We see some growth. You see a market on the institutional side, which is about 95% occupied. When you look at real estate, think of it like your bond portfolio. So think about duration. So the short end of the spectrum, hotels, multifamily, student housing, very short turnovers, all the way down to net lease and healthcare, which could have a 15-year duration. So we see today in the U.S. moving from a longer-term duration where you saw net lease and healthcare doing very well with interest rates very low and not a lot of growth in the economy, to an economy which could have some more growth and adding more to the short and intermediate term duration asset classes. So could be regional malls, some offices, some industrial assets in the U.S. And then we shift intermediate term, maybe the next 12 to 24 months, into Europe. Lots of political uncertainty going on today, lots of issues to resolve this quarter with Brexit. But as that becomes resolved, then you're going to see some big pops in that market because there are some just glaring values over there today.
I'm glad you brought up Europe, but I want to follow up first on what you said about malls because, of course, a lot of the retailers like Macy's have been pulling out and selling a lot of their stores, their underperforming stores. That whole idea of an anchor tenant in a mall is kind of falling apart. And we've got all these suburban landscapes dotted by empty, vacant malls. What's your thought on how this dynamic changes over the next 5 to 10 years?
Sure. There's going to be winners and losers in the mall sector and the retail sector. The good malls, the A-quality malls, the highest sales, the best merchandise malls. Think of a mall like a retail store. You can't keep a retail store looking the same way for 30 years. You have to constantly change it and update. So there's very good, very productive malls where they're seeing sales increase year over year, quarter over quarter, and those will continue to do well. The B and C malls are really going to face a lot of competition, first from the Walmarts of the world, and now from the Amazons and from the internet.
What are the thriving malls, what else do they have in common? I mean, obviously it's not enough just to update them. Is it a geographical thing? Is it a mix of type of stores? What makes a mall thrive?
It's all the above. One, you have to be in the right demographic zone. You have to have the right populations. You have to have an economy thriving around you, job growth, and then you have to merchandise the mall well. So good sales, good employment, and then you see that they're merchandising the malls. And to your point about the department stores, yeah, the department stores are kind of a middleman in this business, right? And what the Amazons have done of the world, they've really taken away the middleman and let you go direct to consumer. We don't need as big a mall space anymore in terms of the department store. So the utility of those stores has really gone down, but the inline stores has come up in that you're seeing a lot more interest, a lot more activity in entertainment, in grocery stores, in movie theaters. You look at a mall and look at an Apple store, it's never vacant.
Right.
The Microsoft experience, it's never vacant. And they're really changing the dynamic of those good shopping centers.
Last question for you. I know you're off to Frankfurt tonight. Are people in Frankfurt thinking that they're going to be the next London, the next financial capital of Europe because of Brexit?
Well, I'm sure a lot of countries and cities are looking for new places to house the ex-employees that potentially coming as a result of Brexit. Yeah, there's Frankfurt, there's Dublin, Paris, Amsterdam are the likely candidates. So they're all vying for a position in that market. Even Poland now is looking to be some back office operational.
Poland.
Yeah. So there will be some winners and losers. There's probably some space requirements that will be needed for offices, but you're not seeing the major financial corporations close down in London. There's going to be smaller bits that move out, but there will be some winners out in the market.
All right, Mark Halley, PGIM Real Estate Securities CIO. Thank you so much.
Thank you.
And safe travels.
Thanks.
Coming up, President Trump touts his, quote, pro-growth policies, but which kinds of stocks have profited? We'll look at the data. This is Bloomberg.
Scarlet Fu. What you missed? Let's take a deep dive into the Bloomberg. You can find our charts using the function at the bottom of our screen. And I'm going to start with my chart, which is on equities. So Donald Trump, as we know, is pushing a pro-growth agenda. It's ironic, then, that it's led to a sustained rebound in value-type stocks, right? That, at least, is according to Tom Lee of Fundstrat. So this is the ratio between S&P 500 value and growth indexes. So as the line goes up, value stocks are outperforming growth stocks. And you can see that value is recovering from a 15-year low set last January. Tom Lee says that potential tax law changes, deregulation, and spending growth, they amount to a policy put option that'll benefit value more than it'll benefit growth. And if you think about the industries that President Trump is really pinpointing, industrials, the car makers, right, the defense companies.
Right.
And he's definitely not looking at the tech companies with that same focus.
No, and the growth stocks don't need growth in the economy. I mean, Facebook, Amazon, they're doing incredibly well, growing incredibly fast, even though the economy has been mediocre. It's really those industries that you talked about that need GDP to pick up in a stimulus. So definitely a chart to watch to see how the market is assessing Trump. I want to go back to Europe and talk about something we were talking about earlier, which is France. And this is a chart going back to the beginning of the year of the spread between French 10-year yields and German 10-year yields.
Pretty dramatic.
So the spread is a measure of creditworthiness. Germany is seen as the safest haven in Europe. And France is still pretty low. I mean, yields in France are just over 1%, not that high. But the spread widening is clearly a measure of political risk. Everyone is worried that they, fool me once, fool me twice with the Brexit Trump stuff. Then you have Le Pen. They're like, I don't want to make this mistake again. Also, you have potential scandals surrounding the head of the Republican Party, which is the Conservative Party, Fillon, who's considered to be the most favored to win. So that throws a potential monkey wrench into things. So, just in general, nobody really wants to have exposure
visibility
to French yields, right?
Well, everyone's positioned where they think that the worst will happen or the most unexpected thing will happen after Brexit and the U.S. election.
Right, and they're not really, 1% 10-year yields. It's not like you're getting paid that much to take on French risk. So you can, what's really the appeal?
And of course, that's something we'll keep an eye on. If you go to EU Go, there's actually a chart available of the different implied probabilities, French election probabilities for the three candidates. That'll be a deep dive for another day.
That'll be good.
All right, coming up next, President Trump's bid to slash regulations will face some bureaucratic roadblocks. It turns out killing a rule not as simple as it seems. This is Bloomberg.
I'm Mark Crumpton. It's time now for First Word News. Washington State's Attorney General says he's suing President Trump over an executive order that suspended immigration from 7 countries with majority Muslim populations and led to nationwide protests. Bob Ferguson announced his lawsuit today, becoming the first state attorney general to announce a legal action against the Trump administration over one of its policies.
The lawsuit is straightforward. It asks the court to declare key provisions of President Trump's executive order on immigration unconstitutional.
The president has repeatedly said the move is aimed at protecting the nation against extremists looking to attack Americans and American interests. An act of terrorism. That's how Canadian Prime Minister Justin Trudeau described Sunday night's deadly shooting at a mosque in Quebec City. 6 people were killed during evening prayers. Over a dozen other people were wounded, with 5 still hospitalized in critical condition. Authorities initially arrested 2 men, but later said just 1 remains a suspect. Prime Minister Trudeau did receive a condolence call from President Trump. Esteban Santiago, the Alaska native accused of killing 5 people and wounding 6 others at a Florida airport this month, has pleaded not guilty. That's after the judge took the unusual step of reading the entire 17-page indictment aloud in court, with repeated emphasis on the victims' names. Investigators say Santiago, an Iraq war veteran, opened fire in a baggage claim area at Fort Lauderdale Hollywood International Airport. No trial date has been set. Former President George H.W. Bush has been released from a hospital. According to a family spokesman, the 92-year-old Bush is thankful for the prayers and kind messages he received during his stay at Houston Methodist Hospital, and from what he describes as the world-class care from doctors and nurses. Mr. Bush was being treated for pneumonia. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Let's get a recap of today's market action. U.S. stocks fell, but they certainly came off their lows. At one point, the Dow was off by 222 points. All 10 industry groups in the S&P 500 were down. But as it turns out, consumer staples and utilities finished little changed on the day.
What'd you miss? President Trump has signed an executive order aimed at significantly cutting regulations for small businesses. The White House says it requires agencies requesting a new regulation to identify 2 others they will cut. But it's a daunting goal, and experts say killing a regulation is not as simple as it seems. Joining us now is Kevin Cirilli, Bloomberg's chief Washington correspondent. Kevin, do regulations work like this? There's just a big pile of them, and if you put 1 in the jar, you can take 2 out?
No, and in fact, I think that there have been several efforts in previous administrations to work on something like this, but all in all, this is essentially a repackaging of campaign rhetoric, and President Trump clearly trying to show that he is going to do what he said he would do on the campaign trail. Now, that being said, the big executive order that is still making headlines here in Washington and on the Capitol, of course, deals with the temporary travel ban for majority Muslim countries. And so, you know, a lot unwinding here on Capitol Hill. The Republicans that I'm speaking with and their top aides tell me that there is not behind the scenes much support for this effort. Some Republicans increasingly somewhat speaking out against this, but still not the type of Republican opposition that would be needed, I think, to aid Democrats in their efforts to block this.
And of course, the president also said that he's going to go after the 2010 Dodd-Frank law as well, the overhaul of the banking industry. Do we have any details on this? I mean, beyond him saying that he's really going to go after it big time, how are people preparing for this? How are the various committees looking at this? How are individual senators and congressmen approaching it?
I put this to a senior staffer on a Republican member of the Senate Banking Committee. I said, you know, what do you make of President Trump's comments earlier today? And what this staffer told me was that there was no communication between the White House and the Senate Banking Committee ahead of that comment. And so it appears that that was an off-the-cuff remark. But that illustration speaks to a larger dynamic that has developed here in Washington, and that is that there is no messaging strategy coming from this White House through Republicans in the Senate and in the House. That, of course, poses significant challenges for Republican lawmakers as they look to work in tangent with this White House on a host of issues, whether it's repealing parts of Dodd-Frank or tax reform, or, of course, what is just around the corner next week, that is addressing Obamacare.
Yeah, so go on this point about how there's a lack of messaging between the White House and, you said, the Republicans. There was this tweet from Matt Drudge earlier today that I saw. He doesn't tweet very often, but he said, oh, Trump is not getting any help from the Congress. They haven't passed a tax cut yet. They haven't passed an Obamacare repeal yet. Is this some sort of like coded message that they got to get in gear and start passing things? Otherwise, this sort of Trump, Breitbart, that wing of the party is really going to start getting impatient?
Well, so much of the attention has been focused on this temporary travel ban, but actually some other significant news on Friday was that Steve Bannon, a top strategist within the Trump White House, was promoted, if you will, onto the National Security Council to sit with top generals and have a heavy seat at the table in terms of foreign policy. I put this question about what to make of all of this earlier today to Senator Jack Reed, a Democrat from Rhode Island. Let's take a listen to what he had to say.
I don't think it's a very good precedent to set. What they've done essentially is pushed out the senior military advisor by law to the President of the United States. That's the chairman of the Joint Chiefs of Staff. You need in those types of deliberations nonpartisan military advice from a seasoned professional, and General Dunford is exactly that person.
So Democrats pouncing on this. Republicans, though, that I'm speaking with say that they are still in line. They are still supportive of the majority of what President Trump is trying to accomplish. The mechanism, though, again, that disconnect that's developing between people like Steve Bannon and the messaging coming out of this White House, that is where the frustration lies at this point.
Speaking of mechanism, Chuck Schumer, the senator from New York, says that he will ask for a vote today to overturn Trump's travel ban. He says the travel ban must be reversed. It's mean-spirited. How does that happen? How does he go about doing that?
Well, given that he is in the minority party, that really does not face any real shot of happening. It would simply be, if it were to happen, and again it won't, it would simply be just a public way of showing opposition. But again, just given that he is a Democrat, the math simply isn't there. Here's what I can tell you. Later this evening, virtually every Democrat in the House and the Senate, including Senator Chuck Schumer, are going to be gathered outside of the Supreme Court building, again showing their opposition to President Trump's executive orders. But you talk to people like Senator Richard Shelby, you talk to people like the more conservative members in the House Freedom Caucus, they are still behind this president. Again, it's the messaging, that frustration that Senator Mitch McConnell not sending talking points over the weekend, that lack of messaging is truly becoming an issue for this White House. Not everyone in the Republican Party is on the same page.
Bloomberg's Kevin Cirilli on Capitol Hill. Thank you very much. And a quick programming reminder, Bloomberg will have live coverage. This is Tuesday at 8 p.m. in New York of President Trump announcing his pick for the U.S. Supreme Court. That's at 8 p.m. tomorrow. Coming up, the Turkish lira leading gains among emerging markets today. Emerging market currencies, that is, rebounding from last week's decline after Fitch cut the nation to junk status. We've got more on Turkey and Mexico. This is Bloomberg. What'd you miss? One of our big themes today is expectations versus reality. And you can see this idea really in emerging markets. The reality of President Trump's immigration policy coming into focus, which led emerging market stocks and currencies to decline today as investors pared down on risk. Joining us for more is Gerardo Rodriguez. He is portfolio manager for the BlackRock Emerging Market Allocation Fund. So talk a little bit about the significance of, not today, but the executive action taken over the weekend and what that means for EM assets insofar as people's risk appetite.
Well, this is happening at a time in which the global economy is actually accelerating. Emerging market economies it turned positive from a growth perspective last year and have been accelerating. Now, there's a lot of uncertainty out there, especially with regards to trade. I mean, we saw some initiatives on immigration, and this positive outlook that we call reflationary environment, because both growth and inflation are actually going up. The risk around that positive scenario for financial asset prices is just going up as the rhetoric goes up, Mexico-U.S. relationship, now the immigration. So we are still in the camp at BlackRock where the reflation story is the dominant thing for financial markets, but there are these risks starting to go up.
What's driving the reflation? Is it the commodities rebound? Is it the solid data out of China? Is it expectations of more robust growth out of the U.S. and Europe? You hear a lot of talk about reflation, but what would you say is what's causing it to turn the corner?
Well, it's a mix of different elements that have been compounding over the past few months. It is a story that started with the stabilization in China, and actually fiscal and monetary policy stimulus is starting to play, not only stabilizing the economy, but seeing a rebound that actually led to also a rebound in certain commodity prices. Oil prices went up with the OPEC agreement, but also here in the U.S., you saw that both, again, inflation and economic activity going up. Japan, same thing. In Europe, in the emerging market space, manufacturing activity turned positive early in 2016 and has been accelerating. So after the crisis, I think this is the broadest based reflationary and accelerating growth environment that we've seen.
So I want to bring you inside the Bloomberg here. This is a chart that you gave us. It's G#BTV5569, and it's a trade that you've been working on here, and it's U.S. dollar versus local currency Mexican bonds. What are you trying to do, and what does it say about your outlook?
So when you think about Mexican asset prices, the Mexican economy has pretty strong fundamentals. It is an economy that is very well anchored from a fiscal and monetary perspective. It is an economy where authorities have let the currency go, interest rates have adjusted, operating as automatic stabilizers. Now, the price action that you've seen, especially in the currency and local rates, has been driven to a very large extent by the uncertainty around the potential negotiation of NAFTA.
Right.
So if the central scenario here is one in which you're able to start a renegotiation of NAFTA with Canada, the U.S., and Mexico, that sort of takes away all the big negative scenarios from the table. You can start having asset prices in Mexico to perform. Interest rates in Mexico have gone up to a much larger extent than credit spreads. And we think that that trade of convergence among the two is sort of the first stage of a positioning in Mexican assets that would make sense.
Yeah, you also, I mean, this trade is the anti-Mexico trade is also very crowded. If you look in this chart on the terminal, G#BTV4678, you can see risk reversals really declining, lots of bets against the peso. Is this a situation in which the trade has become so crowded that it's just a matter of risk-reward skewing to the upside?
Well, if we put in context the peso, say right now at 20.8, it was close to 22 at some other point.
Right.
The outcome of the bilateral negotiation has to be very negative in order to justify these prices. So what you're seeing right now is a bit of a reversal of that trade. People are starting to be positioning positively on Mexico, assuming that the outcome is going to be more benign.
You know, I got to ask you about central banks here, because I wonder to what extent the Fed matters more than Turkey's central bank or Mexico, which have been trying to support their currencies but haven't really gotten anywhere with that. I mean, do they matter in looking at whether the currency can find a floor?
Well, I think that, so when you think about emerging market prospects at this point, the Fed may not be one of the top concerns. Markets have had significant time to adjust and prepare for an initial sort of cycle of tightening in the U.S. What's driving monetary policy in countries like Mexico and Turkey is, to a very large extent, domestic idiosyncratic dynamics more than the Fed itself. Of course, if the Fed starts raising rates, as everyone is expecting, there will be some follow-through, but 25 basis points in the scheme of things, having interest rates in Mexico, for example, gone up to 100 basis points in the long end of the curve, that is not the biggest concern at this point.
All right, Gerardo Rodriguez, portfolio manager of the BlackRock Emerging Market Allocation Fund. Thank you very much.
Thank you.
And up next, Microsoft co-founder Bill Gates and Berkshire Hathaway CEO Warren Buffett on immigration and its important role in the U.S. economy, as well as its place in American history. This is Bloomberg.
Scarlet, what'd you miss? The tech community has been vocal in its opposition of Trump's recent travel ban. On Charlie Rose on Friday, Microsoft co-founder Bill Gates, along with Berkshire Hathaway CEO Warren Buffett, discussed the importance of immigration to the U.S. national security as well as to the economy.
The most important import the U.S. has ever had, by far, is human talent. It's been to our benefit that a lot of the hardest working, best and brightest from almost every country in the world have wanted to come to the U.S. And so if you look at university departments or, doctors, engineers, people starting up companies, building jobs, it's been a huge strength of ours. We haven't always made it super easy for that to work, but it has worked very, very well. So the number going back, it's meaningful, but net, we are still a huge beneficiary of human talent.
But it used to be said, and Tom Friedman, I think, first wrote this, we ought to staple a green card to every diploma.
Yeah, I believe that. Now, is that, a bias because I'm from the tech industry where we can create multiple jobs around the engineer? instead of having to do that outside the United States. Yes, I believe that keeping talent in the country is a great thing.
Tell us the story, because you told me the story, and I didn't have it before. You think the second most important document in America's history after the Declaration of Independence, or perhaps the U.S. Constitution, or both, is this letter?
Yeah, it was a letter written
by two immigrants.
It was a letter written by two Jewish immigrants.
Whose names were?
And that doesn't sound like much, so I'll tell you one of the names. But in August of 1939, just before Germany moved into Poland, Leo Szilard, whose name is not well known, who was born in Hungary, but he went to Germany, and he worked in Germany with Albert Einstein. And in 1933, I believe both of them left Germany. And where do they come? They come to the United States. And they become United States citizens. And they co-sign a letter to President Roosevelt. Szilard got Einstein to sign it because his name carried more weight. And that letter, which you can see on the internet, not even a full page, says Germany is going, I'm really paraphrasing it here, but Germany's going to get an atom bomb, and it may work. It didn't say for sure it would, and that we better get to work on one. And the Manhattan Project came out of that, and who knows what would have happened in World War II. If Hitler hadn't been so anti-Semitic, basically, he drove out these great scientists and everything. And secondly, if those two hadn't chose to emigrate to the United States, the United States was, it welcomed them, and they may have saved this country. They may have saved this country.
So Germany did not get it, and we did.
Yeah, we those V1s and V2s that were lobbed over there into England and everything, it doesn't have the right warhead from the standpoint of the Germans. And if we started 3 years later, who knows what would have happened. Remarkable men, and they were both immigrants.
You sent me a note maybe a month ago, and you basically said, I'm not worried about the American economy.
That's right.
What I worry about is that somehow, in some way, we'll make a mistake in terms of the employment of nuclear weapons, or some bad character will buy them or steal them. And
weapons of mass destruction are out there. And the knowledge,
accident, maybe it's a computer clip, or whatever it might be.
It's a tiny, tiny probability any given day.
Right.
But there are people who wish us ill. There are people who would like to kill millions of Americans. And there's some psychotics, there's religious fanatics, there's megalomaniacs. The world has a certain number of them, and if they get in the wrong position and they have the knowledge and they have the ability, there are people who would like to kill millions of Americans. And the weapons are there to do it. When Einstein said shortly after the launch of what was then called the atomic bomb, he said, I know not with what weapons World War III will be fought, but World War IV will be fought with sticks and stones. And that probability exists, and it's the number one job the President of the United States, which every president acknowledges, is to the extent possible protect us from weapons of mass destruction. And they can exist with individuals, but you don't worry too much about that, the intent. But with organizations and maybe even with a couple of nations. And it's the only real cloud on America over time. We'll solve the economic problems, but that's number one.
That was Microsoft co-founder Bill Gates and Berkshire Hathaway CEO Warren Buffett with Charlie Rose. And as world and business leaders react to Trump's latest executive order on immigration, we have an exclusive interview with GE's chairman and CEO Jeff Immelt on Wednesday.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. It wasn't just Bill Gates speaking out against President Trump's immigration policy. In an interview with Bloomberg TV Canada, BlackBerry CEO John Chen calls the U.S. action, quote, quite extreme and sudden. He is hopeful this new policy will help in attracting talent to Canada. Meanwhile, Amazon CEO Jeff Bezos put out a statement in the last hour saying that he does not support Trump's immigration order. Bezos said that the full extent of the company's resources will support any employees affected by the policy. Mylan confirms it received an information request from the FTC as part of a preliminary investigation. That's in response to a query from Bloomberg. The FTC is looking into whether Mylan's practices violated antitrust laws, including whether minor changes it made to the EpiPen effectively shielded it from competition from lower-priced products. Mylan is also linked to a Justice Department investigation into price fixing by generic drug companies, though it's unclear if it's the target of that probe. And that's your Bloomberg Business Flash. Coming up, what you need to know to gear up for tomorrow's trading day. This is Bloomberg.
What'd you miss? U.S. stocks falling along with the rest of the world, or at least those that were not closed for the Lunar New Year. We saw the Dow losing as much as 221 points, but it paired its decline.
Pretty solid rebound, down only 60 basis points on the S&P.
All right. In terms of what we're going to watch for tomorrow, overnight, the Bank of Japan will announce its latest monetary policy decision. Don't miss that.
No, I did mean 60 basis points. And some of Trump's cabinet nominations being voted on tomorrow. Jeff Sessions, Betsy DeVos leading it off. Also, Elaine Chao faces a Senate vote to become the transportation secretary.
And don't miss this. Apple reports first quarter earnings after the bell tomorrow. That's all for What You Missed. Thanks for watching.
Have a great evening. This is Bloomberg.